saw the market over the NSE 20 shedding almost 3%. That's a 3-year low for the equity front. I mean, it really is at this point in time, investors choosing safe haven assets, choosing fixed income assets over equity, the equity stocks. What is your reading of the week that was last week?
Thank you very much, Samantha. Basically, looking at it in terms of the market, you've been able to summarize it very clearly. We are seeing a lot of flight to quality, especially in terms of investors trying to make sure that they take advantage of the relatively high interest rates that are very, very promising, and also trying to be a bit cautious in terms of the equities front. But looking at it also in terms of looking at the market, especially generally, as we go towards December, it's expected that investors shift their focus towards the spending month. And so because of that, you're seeing little interest in terms of the equities front. Well, looking at it in terms of the corporate actions that are coming through, they're fairly strong. Just like you mentioned, East African breweries, we are seeing them coming strong with some news, and other companies that are also thinking about looking at their capital structure. Definitely that is also creating a bit of a concern in terms of how the market is reacting towards the market. But generally the bearish trend is a bit of a concern, but also an opportunity for people to be able to buy into some of these relatively cheap stocks.
Obviously opportunities are presenting themselves. Let's talk about East African breweries. You mentioned they've secured that loan from Diageo, a 19.5 billion shilling loan in order to purchase that remaining stake in Kenyan Breweries. Also going to be securing around 7 billion shillings from the sale of Tanzania Breweries. How do you see this increased level of competition playing out in Kenya and the East African region with SAB Miller?
Well, looking at it, especially in terms of the beverage market, that has been one of the major things that you've been seeing being very active on our front. The market that you're looking at right now is still very promising, especially look at it in terms of East African breweries, which has enjoyed a lot of presence, especially in the Kenyan market. What we seem to be seeing now is that they're trying to take a position not only in Kenya, but in terms of the region, and Tanzania to be in particular. And looking at it in terms of East African breweries, which is listed in our market, looking at it especially in terms of the share price, we've been seeing the share price being very shifty, especially because of news that they are going to raise the 19 billion from the market through a rights issue. But with them being able to look for alternative financing, definitely that has created a bit of a support in terms of the share, and hopefully it might be supported in terms of how it performs. But in terms of their balance sheet, I guess right now we are yet to fully see what impact that might have in terms of how they're going to be able to perform. But looking at it in terms of the competition, definitely is going to be very, very stiff, especially looking at it in terms of the recessionary environment that we are in. And so it's going to be, going forward, it's going to be quite challenging for them to sustain their profitability.
And managing those costs, we've seen the impact that the weaker shilling has had on the bottom line of many companies, especially manufacturers. At this point in time, it has managed to gain, quite a significant amount of ground. But the key is whether they're able to pass on these higher operating costs to consumers. How elastic is demand for beer? I mean, how able is EBL to pass on these higher costs to consumers?
Well, definitely looking at it in terms of especially the inflationary pressure that we've been seeing on our market, disposable income for most Kenyans as well as most of the buyers within the region has been affected. For manufacturers, especially for people who import some of their raw materials, like just like you mentioned, the behavior of the shilling has been a major concern. They might not be able to push that cost to their consumers, and so most likely they might have to absorb it. That definitely going to affect their performance, especially their top line. So the challenge right now is for them to be able to ensure that they are efficient and try to reduce, especially in terms of too much borrowing, and also in terms of ensuring that they're able to be efficient in terms of their production. But in terms of pushing the cost to the consumers, that might be a challenge, because disposable income, looking at our economy right now, has been significantly affected. Also looking at it in terms of the spending season of December, maybe they might be able to position themselves to still perform in terms of their selling. But looking at it in terms of how Kenyans are talking in the market, the condition is very, very challenging.
The current PE of EBL sitting at 17.4 times. It's looking more expensive than other stocks in the market, sitting at 161 shillings. Would you be waiting for further pullback in the price, or 161 a good entry point?
Well, especially due to this new information about their borrowing, or the capital structure might be affected in terms of their earnings potential. But in terms of the pricing of the stock, looking at it especially over the recent past and the potential that it still has in terms of taking advantage of the region, it looks fairly priced. But looking at it in terms of how it has behaved over the last few months, we've seen it drop to a low of 152. And so definitely right now, once the news come through, I would expect it to continue within the 155 to 161 range.
So perhaps perhaps buying in on that pullback to 155. Let's look at the banking sector. Really hard hit last week, giving up 6.5%. The likes of BBK over 11% in the red. We know that come mid next month, we're going to have the increase in the cash reserve ratio to banks. That will rise by around 50 basis points to 5.25%. How is this likely to impact the interbank market liquidity, where we've seen it very tight, and how's that going to impact banking shares?
Well, the central bank has come out strongly in terms of trying to make to mention that it's trying to control the inflationary environment, and because of that, they are increasing most of their central bank rates as well as some of their reserves. And because of that, we are seeing some banks coming out already talking about right issues so that they can be able to strengthen their balance sheets. But looking at it in terms of what you mentioned, Barclays, you're looking at cooperative banks. Some of these stocks that we've seen shared quite a number of points over the recent past. We're looking at it in terms of their Q3 performance, which was fairly strong. It's indicative that they might still be able to do very fairly well. But looking at it in terms of how investors are seeing it, they're not anticipating as high performance as last year, and because of that, I guess we are seeing them pulling back. But hopefully, once they close their year, we might be able to still support double-digit growth. But in terms of what you've mentioned, the central bank is giving them quite a bit of run for their money in terms of how they're going to be able to still take advantage of the opportunities that are there in the market. And I guess right now, the people with strong balance sheets are very well positioned to be able to take advantage of the opportunities that are already there in the market on the fixed income securities, as well as some of these other loan books. But in terms of how they perform, especially coming near, definitely is going to be quite challenging for them.
Going into 2012, I know one of your top stock picks is Samuel Investments. They've repositioned the company, removing or delisting from some of the stocks that they're currently holding in the equity front, given the fact that we've had the bear run in the market. Do you like the change in strategy from Samuel?
Well, looking at them, especially as a portfolio stock, they are very well positioned to be able to still take advantage of the opportunities that will be arising in the market because of the lower prices that you're seeing on the equities front. But looking at them in terms of how they are taking advantage of the opportunities that are arising in the market, their decision to venture into real estate, and also they are being cautious, especially in terms of a time like now, especially as we go into next year, is very well positioned. And that's one of the stocks that I'm very, very bullish on, and very hopeful that they're going to be able to diversify very strongly to be able to take advantage of the opportunities that are there not only in Kenya but even in the region, in terms of ensuring that they diversify their portfolio and are able to still sustain their profitability going forward.